Hey everyone, it's Tom Karadza. My son recently turned 18 and it prompted a lot of discussions on how an 18-year-old goes about buying their first rental property. So here it goes. You need three things to buy a rental property. One, you need a down payment. The down payment's usually going to be about 20% of the property if it's a rental property. So 20% down payment, which is obviously really difficult to save up for, but that's what I discuss with them. Maybe you get some help with it, but that's what you need, number one. Number two is you need income. The moment you get full-time income, the banks are going to lend to you. So you need income. Number three is you need credit. And this is where most people get messed up. The way to build credit, especially when you're starting out as an 18-year-old, is you're typically going to need a credit card. And to us, credit cards are basically evil. I tell my kids all the time and everyone around me that I went into a lot of bad debt in my late teenage years, my early 20s. So I'm absolutely against credit cards. But where credit cards can serve us is when you're trying to get an 18-year-old, a 19-year-old, a 20-year-old to build their credit. And here's how you do it. You're typically going to get denied by the big banks in Canada if you apply for a credit card because you don't have a credit history. So you can go to a secured credit card. The options that I know of for those are typically Capital One or Home Trust. And when I say secured credit card, the reason I'm saying secured is because you typically will have to give $200, $300, maybe $400 or $500 up front to secure that credit card. And once you do that, they will give an 18-year-old a credit card with no credit history because it's a secured credit card. So you get this credit card. And then there's a couple things you need to do to build the credit properly. What some people do is they will get the credit card, they will buy something, and then they will almost immediately pay it off. And if you do that for 2 or 3 months in a row without getting the statement, the banks are going to think you're not using it. So really what you're supposed to do is spend a little bit of money on it, wait till the statement comes in, and then pay it. That's how you build up the credit. So most of the mortgage brokers we work with and the guys over at Butler Mortgages, they have this cool little system where they'll advise people. They'll say, hey, listen, buy one thing with your secured credit card for $100 and then pay it off at $10 a month over the next 10 months. And that's all you need to do. And then within 2 months in that process, you're already going to have a credit score. And maybe after 2 months, you'll be able to already go to one of the big Canadian banks and get approved for a regular Canadian bank credit card because you now have a credit history. But if you do it over 10 months, you're definitely going to have a credit history. And after 1 year, the banks will want to see, let me correct that. The banks, to get you a mortgage, an 18-year-old a mortgage, need to see 1 year's worth of credit history. So if you do that one little plan, you buy one thing for $100 on your credit card. Every month you make the minimum payment of $10. You do that for like 10 months. You are going to establish a really good credit history. Within 2 months, you might even be able to go and switch over to a regular bank card. But after that 10 months, you're on your way to a credit score. After 1 year, the banks have enough of a credit history on you that they will approve you for a mortgage. So that's how you start building your credit. So be very, very careful with credit cards. We're typically anti-debt and anti-credit cards, but to build your credit as an 18-year-old, a 19-year-old, a 20-year-old, that's how you do it. So to buy your first rental property, you need a down payment, you need income, and you need a credit score. Hopefully you find that useful. Until next time, your life, your terms.